You are listening to Mining Stock Education.
This is Mining Stock Education. I'm your host, Bill Powers. Thank you for tuning in. And you'll hear today from Dave Kranzler of InvestmentResearchDynamics.com. He's the editor of the Mining Stock Journal. Dave, welcome back onto the program. And the theme over the weekend, you and I are chatting on Monday, was tariffs and how that would affect, obviously, all the commodities, but specifically the precious metals. What's your take on the impact of tariffs on precious metals, particularly in the U.S.?
Sure. First, it's good to see you again, and thanks for having me on again.
Yes, absolutely.
So, I haven't seen much discussion about, if there's obviously been a ton of discussion about the effect tariffs will have on the price of gold and silver. But my view is, to the extent, and again, we don't know for sure if there's going to be tariffs put on gold and silver, right? So this country imports quite a bit of silver from Mexico. And I don't know if, it's unclear whether that's going to be tariffed or not. It'd be kind of crazy to tariff it, especially since 70% of all silver produced is used for commercial purposes, right? Military, et cetera, technology. So I think I don't see how the tariffs affect the global spot price of gold and silver, right? Mexico will be able to sell the silver elsewhere. It's just going to be more expensive. The cost of shipping it's obviously more expensive to ship it overseas, transport overseas, than it is to ship it to the U.S., right? So there's some logistics costs that could go up. But it's for sure going to raise the premiums on minted coins and silver that's used for industrial purposes in this country. So, and I think gold isn't really used for anything except it's a tier one bank asset now, right? Tier one reserve asset, and it's used as a store of wealth. So I didn't look up to see how much gold this company imports, but again, I think that the bigger effect there, price-wise, is going to be on the premiums that coin dealers can charge. So the tariffs are going to hurt the big coin dealers because it's going to make gold and silver minted products more expensive, refined products more expensive for the end user, which, primarily retail buyers, high net worth buyers. That to me is the pricing effect of the tariffs on gold and silver.
How do you think the Fed responds? They paused what they were doing in light of tariffs. How do you see them responding?
I think they paused because they know inflation is way higher than what the CPI says it is. I just find it absurd that policymakers and so-called experts in the financial media sit there and discuss the CPI like that's the actual rate of inflation. I don't, for me, on the things that I have to buy daily, weekly, monthly, I'm experiencing way more than 3%, 2.8% price inflation. I'm sure you are too. So I think part of the reason the Fed has paused, so if you go with the assumption that price inflation is way higher, like we were talking before we started recording, I think it's probably running more like 8 to 10% annually. And that's what John Williams' Shadow Stats alternative CPI index shows. And all he does is he simply recreates the way the government calculated the CPI index in 1990 and in 1980. And he shows the calculus on his website if anyone questions that. And his 1990 alternative has inflation at 8%. And like I said, that's probably closer to what I'm experiencing. Hell, my auto insurance went up more than 10% this year, and I haven't had a ticket in quite a while. So my point here is I think the Fed knows that real rates using a real rate of inflation are still negative, even at a 4.5% Fed funds rate. If you're running at 8% inflation, you got 3.5% negative real rates, right? And so I think that's the reason why they paused. And we also discussed, and I wasn't even aware of this because I hadn't looked at the Fed's M's, the measures of the money supply for a while. M2 is damn near an all-time high right now, and that's happened very quietly. And that's your source of price inflation and these asset bubbles that we have. And that's why the Nasdaq and the S&P and the Dow keep hitting all-time highs. It's because the Fed's been pumping liquidity into the system, but no one's talking about it. So that to me is probably why the Fed more than anything paused. FOMC day is such a circus anymore. I really don't pay that much attention to Powell's pressers. He's going to tell you what he thinks you want to hear, not the truth. And so I thought, I'll read like summaries of what he had to say. And I thought that someone had asked him about the tariffs, and I thought he kind of didn't he deflect the question or something?
Yeah, I didn't watch, but I believe you're right. Yeah.
Yeah. So, this is going to, if the Fed needs to continue lowering interest rates because the banks are facing tight liquidity conditions, which they are, which is why he's been pumping reserves into the system and inflating M2. The reason why he would continue lowering rates is it'll be beneficial for the banks. B, it'll make Treasury issuance cheaper if the government continues issuing at the shorter end of the curve. I don't know that they're going to be able to now that reverse repo facility is almost tapped out, because that's what's been funding the government spending deficit. And then lastly, again, this economy is not what it's purported to be. The GDP is just as rigged as the employment data and the CPI. And most people, these surveys hit the tape all the time, but surveys are done where they ask, middle-class people, if they feel like the country's in a recession, they say, yeah, it feels like a recession to us. So, to me, that's the reality of the situation. And that's, if the Fed continues lowering rates, that's not good news for our system.
Mm-hmm. Even if that's what the president wants. He's on record, obviously, using the bully pulpit to try to influence Powell.
You're talking about a guy there who's, he bankrupted his casino empire twice. Chapter 22. I used to trade the casino bonds when I was a junk bond trader. And we used to joke about that. The thing is, how do you bankrupt a casino? Casinos are legal printing presses for money.
Wasn't it in New Jersey, though? And there were some decisions
New Jersey
by
and Las Vegas.
Right, yeah. I've heard alternative stories on that something with the New Jersey laws that hurt the flow of business into casinos.
No, he had too much debt.
Well, we know he likes leverage.
Yeah, maybe if the flow of business was hurt, to my knowledge, the flow of business isn't hurt. People love to play the slots, and that's where casinos make their highest profit margins, are the slots. And casinos, to an extent, determine what the payouts are on the slots. And it's a little bit of a competitive process, but slot junkies, they know which casinos have the best payouts. And you're still, if your payout on a slot is 53%, you're still making a 48% margin on every quarter that's thrown into that machine, right? How do you bankrupt a casino with that kind of economics?
Good question, but it's beyond my area of expertise. But as it relates to mining in the U.S., Dave, Trump has issued some executive orders to streamline things. If we don't see good U.S. projects move forward in the next 4 years, is there any hope for U.S. mining? I guess that's kind of where I'm at with the way things have been.
Well, U.S. Gold just got fully permitted for its copper gold mine in Wyoming. And that's a stock that I still think is extremely undervalued relative to what that mine is going to be worth once it's up and running. There's a chance it might get acquired before it, either while it's in construction or after it's finished and up and running. So they received their permits, their full permitting during I guess it was in the summer this year or last year. Then Integra Resources is in the permitting process for its Delamar project in Idaho, or it's in the pre-permitting process. So that'll be an interesting one to watch, because it's going to need a state permit, and I think it also needs a BLM permit, a federal permit. So we'll know as we see companies that are starting to go through permitting. We'll know pretty quickly. Paramount Gold's another one. They're fully permitted at the state level for their gold mine or their gold project in Southeast Oregon, and I think they should hear from the feds by the middle of this year on their middle to late this year on their federal permit. And I don't see a reason why they won't get it, but that'll be a good telltale to see, if what Trump is doing in terms of streamlining the process and encouraging the permitting of these types of projects, that'll be a telltale there.
Mm-hmm. What are some of the companies that you're looking at in the Mining Stock Journal right now, if you would like to share?
Sure. Well, my latest and greatest ideas, I like to keep an embargo on those for my subscribers. But I've got a couple and I've been out publicly with these names, over the last year. And I think I may have mentioned one or two of them, within the last 2 or 3 years on your show. The one that I was pounding the table in, and, we've been in this downturn or this pullback in the sector. Well, it's not there anymore, thanks to the tariffs noise. But actually, what's going on there, in my opinion, the tariffs are a cover story for what's going on with the prices of gold and silver. I think there's a massive shortage of physically deliverable bars in London, and I think that's really where the issue is. But it's just like in 2020. Remember, we had the same thing. All of a sudden we had a shortage of bars for delivery, and they blamed it on COVID. I mean, the COVID was a convenient cover story for a lot of things that were going south quickly in this country, in our economic system and financial system, as well as the deliverability of availability of deliverable gold bars out of London.
And then they respond with free money like they always do, right? It's like they got no other solution.
Oh, that's coming eventually too. And again, that's why I think we're in store for much higher gold and silver prices. But nevertheless, so Discovery Silver, so we're in the pullback that started like mid-October, right? And Discovery traded from close to $1 down to as low as 48 cents. And I was pounding the table on it again in my newsletter at 50 cents. And they as you know, they announced, it was early last week, the acquisition of Newmont's Porcupine Gold Complex in Canada. And they did a PEA on it. It's an operating gold mine, and that they did a PEA before they decided what they were willing to pay for it. And they think out of the box they're going to be able to do 280,000 ounces of gold a year. And there's also significant exploration upside on the properties that make up the complex, including a 12 million ounce inferred resource. And that I don't know if that'll ultimately end up being a 12 million ounce, proven probable resource, but it's going to be something, and that'll extend the mine life beyond what it's already slated to do. So, and as you know, I'm sure a lot of your viewer base knows, they're also developing a massive open pit silver project, the Cordero project in Mexico. And I was familiar with this project when the previous company owned it, and unfortunately the CEO passed and Discovery bought this. This thing is going to turn into one of the largest it's silver equivalent, right? Silver, gold, lead, zinc. One of the largest silver equivalent producing mines on the planet. And they're basically just waiting to hear on their environmental permit from Mexico, and it'll be off to the races. But the free cash flow from Porcupine will be able to fund the continued advancement and conversion of this thing into a mine. And what you're looking at here, the NPV of the PEA on Porcupine is 2.3 billion at 2650 gold. We're already considerably higher than 2650. And the feasibility study for Cordero, the most recent one, shows a $1.2 billion NPV. And I think they were using low 20s for their silver price. I'd have to check. But so you're talking about 3.5 billion in NAV here, with part of that NAV is an active gold mine, a producing gold mine that's going to be generating free cash flow. Their market cap is 400 million. Even at the stock's more than doubled since the beginning of December. But I mean, you're talking about 400 million of market cap sitting underneath 3.5 billion of NAV. So, of which 2.3 billion of it is based on a free cash flow producing mine. So I think this stock is good for I think it's lower risk. I think they will get permitted for their project in Mexico. The Mexican government just issued a revised permit for Alamos Gold for their island mine down in Mexico. So it's not like the government's, as everyone thought was going to happen last summer. It's not like the government's shutting the door on permitting. If anything, it's probably going to be a little bit easier under the new president. So, and I think this thing is a pretty low risk 2 to 3 bagger this year. If the price of silver were to just go sideways from where it is.
With the cap table is kind of blown out now, that doesn't bother you more? Isn't it closing in on like 1 billion shares outstanding with all of these raises?
No, actually, it's got I think fully diluted is 400 million shares outstanding.
That's it?
Yeah. And I like to use fully diluted when I'm
considering the new raises, including the raises that they're doing now, the money.
Pro forma, the financing that they're using for this deal. Yeah, everything on their website's updated. I like to use fully diluted because, a mine project's got a binomial outcome, right? It either works or it fails. And if it works, the warrants that were issued to help, that were part of the financing process, while they may be out of the money now, they're going to be in the money if a project's converted into a mine, right? So that's why I like to look at the fully diluted number. So that includes warrants and options. The second name, and I've mentioned this before, is Cabral Gold. And it had a nice run last year. It ran from 8 cents to as high as 30 cents. And then in this recent, the recent pullback that we had in the sector, as you know, a lot of these small cap, micro cap project development juniors, their stocks just got annihilated. And so this one pulled back. It traded as low as 14 cents, I think, last week or the week before. It's back to 18. But they're developing a open pit gold project in Brazil. And contrary to what a lot of people might think, Brazil's very mining friendly. In fact, there's a gold mine that just started up last year that is adjacent to Cabral's project. And the CEO of Cabral was a co-founder of the deposit for that mine. It's owned by, it's got an unpronounceable Brazilian native people's name. So it's just, for short, it's called the TZ mine. He was a co-founder of that deposit, and I've had numerous conversations with him, and he thinks that the deposit on his project, QQ is the name of it, he thinks it's going to prove to be larger and higher grade than the TZ deposit. And they're in the process of they've got at the top level of their mineralization, they've got what's called it's saprolite. It's like soft rock mud, and it's mineralized with gold, like 1 to 2 grams per ton. And it's not huge in terms of tonnage, but they're in the process of.
Is it placer gold, Dave? If it's in the mud, is it placer gold or what?
That's the original. It was originally a placer gold. That whole area, the trend where QQ and TZ are, that back in the 1800s they were mined as placer mines. But this stuff it's open pit. I mean, heap leach processing. Super cheap to process, and he's in the process of he's got to put out a pre-feasibility study, but I think he'll be able to get financed for the mine on top of that. And he's, like I said, he's permitted. They could be ready to go with building the mine, like, mid this year to late this year, which means it'll be a producing mine by mid to late 2026. It's take about a year to construct it. It's going to generate. I forgot what the numbers are off the top of my head, because he released a I think it was a PFS, either that or an advanced PEA, showing the economics of it. But by the time he gets everything updated, the numbers updated, and produces the economic study he'll need to get the financing, and they're already engaged in conversations with interested parties to finance the mine. It'll turn out to be a bigger and more valuable mine operation, and it'll produce. So beneath this at surface deposit, underneath that is a hard rock deposit, and again, it's open pit, so they're not going to have the cost of building an underground mine, and a much bigger mine operation will be supported by what's beneath the topsoil stuff. So they'll use the money they make from this smaller mining operation to fund that, and they won't have to issue shares anymore. In fact, just chatting with it, and again, this is all theoretic, and who knows if that'll be the case or not. They may not even need to issue shares as their equity contribution when they get financing for the bigger mine that's sitting on the project. Now, what I like about this is the current market cap's $47 million. G-Mining Ventures, which owns the TZ mine next door. And they've got some other mine projects that they're working on. So, the TZ mine won't be their only mine, and then over the next 2 or 3 years, but their market cap's $1.2 billion. So you're talking $47 million for a project that looks like it potentially is going to be larger and higher grade than the operating mine that just started up a year ago or last summer right next to them. I mean, to me, that's a big disconnect. I ultimately think this stock is at least a 10 bagger, and it's not a 10 bagger this year, but over the next 3 to 4 years. And then,
so I noticed a theme. You like near-term cash, right? Because you've discussed earlier stage projects on the show before, but you're liking like cash flow within a year or two here.
Well, that's been kind of a trend. If you've noticed, there's been a handful of companies that are junior product developers, and their stocks are, obviously you and I agree that the junior mining companies with good projects are way undervalued. And so the only way to finance, other than, up till now, the only way to finance these things is to issue shares, and often that come with warrants, right? So, it gets to be dilutive. But so there's been this trend where you've had a handful of companies acquire producing assets with the intent to use the free cash flow to advance their bigger project, right? Integra Resources did that by buying the Florida Canyon mine. That's what Cabral's doing with building its own small open pit heap leach operation. Like I said, it's already permitted by the government of Brazil. And Discovery with the Porcupine Gold Complex acquisition. And then the third one I wanted to just mention is Heliostar Metals. And they've got their Ana Paula project down in Mexico that they bought on the cheap from Argonaut. Argonaut was just, when they decided to sell Magino, they basically liquidated all of their. They converted into something called Florida Gold Mine LLC or something like that, or Florida Canyon, and that had the Florida Canyon mine in Nevada, and then it had 2 small producing gold mines in Mexico, and then some development assets.
Do you mean
And
Garrett Canyon or Florida Canyon? Sorry.
Florida Canyon,
Okay.
Florida Canyon. Integra bought the Florida Canyon mine in Nevada. And then these guys, there's the La Colorado mine, and I think it's called the Santa Ana mine or something like that. They're very small mines, but they produce gold. And Heliostar is going to be able, they think they're going to be able to go in there and rework them so that they produce more than they were producing under Argonaut. And again, I think both mines are actually, already producing free cash flow for Heliostar. And so that's another example of a company that will use that free cash flow to build out and advance its bigger project, the Ana Paula project, that they think they'll be able to develop that into a 200,000 year an ounce mine, without issuing shares. So, and I talked to the CEO there, Charles Funk, you know him, and he thinks there's a possibility they might not even have to, again, issue stock when they go into the process of getting Ana Paula financed for construction. This one has, now Heliostar has a bigger market cap than Cabral. It's got $152 million market cap. But that's just a function of how valuable the market now sees that Ana Paula is, plus the fact that, they paid $5 million for Argonaut's asset portfolio, and it's going to, they'll get paid back on that by the end of the year, or, by the end of the first quarter from the gold that they're producing. And I think, if you can envision a mining producer that is, let's just say, they're going to be producing 200 to 250,000 ounces a year when Ana Paula is converted to a mine and ramped up and producing. That's the type of profile right now that gets, a $500 million to $750 million market cap in this market. And by the time all this happens, I think we're going to be seeing much higher gold prices. So, you're basically buying what I see as a $500 million market cap company in 2 to 3 years for $152 million.
And I think you brought that up on the show years ago when it was like $10 or $20 million market cap, right? When you first invested in Heliostar?
I don't remember if it was that low.
But it had the Alaska and the Mexican assets at the time.
It still has that Alaska project, and they pivoted away from that because they had this opportunity to buy Ana Paula on the cheap. They got it. Like I said, Argonaut was just, they needed to get rid of the Florida or the Mexico assets so that they could sell the Florida Canyon mine. And, once they decided to sell the Magino mine to Alamos, that's when they just decided to liquidate. And at the time that Heliostar bought the Ana Paula project, there weren't any other real bidders for it. So they were able to get it dirt cheap versus what it is versus the potential of it. And same thing with the two small producing mines. There wasn't anyone out there, they're too small for a larger company to want to own. And there wasn't anyone, with Heliostar's profile that was interested in buying them. So $5 million for that, it's incredible.
What you're describing, and I'm not a Heliostar investor, is what Catherine McLeod-Seltzer said on the show a few months ago. She's the Kinross board chair, and she said the money is made when, she said 80% of making money in the junior mining is buying the asset for the right price at the right time in the cycle. That's 80% of how to make money in this. So that's kind of what you're describing here with this asset.
Yeah, exactly.
Yeah.
Yeah. When they bought Ana Paula, again, the market, that was last year. And it was before we had that big rally, that peaked in mid-October. And so, any kind of projects that were being offered were semi-distressed sales, because no one was interested in buying them. So yeah, you're right. She's right. They took a risk, but they thought it was a good calculated risk. You're at the low point in a gold and silver price cycle, and you had a motivated seller.
I like non-dilutive ways to advance the projects, which is what you described with some of these business models.
This is anti-dilutive when you think about it, because all of these mines that we're talking about are going to be free cash flow generating, right?
My one caution, though, having observed the sector in small mines, some of these execs fall into the temptation of using the small mine when it's spitting out some cash flow just to become a lifestyle company. And then like the big upside is not pursued for investors, and they just have their nice cushy salaries, and they say,
that's not Charles. That's not his.
I'm not saying it is. I'm
MO.
just saying I've observed it though with the small miners to where they spit out cash flow, and then it's like, this is my vehicle to fund my lifestyle.
Yeah, no, that's not Charles. He's extreme. He wants to become a mid-tier gold producer or a mid-tier mining company. That's his goal, and he's young. He's highly motivated. He's got industry experience. He was one of the ones who helped discover Wissla's deposit. So, and I've become very friendly with him, and I've had dinner with him a handful of times, and I mean that's what we did. We discussed the mining. It's not, oh, how's the kids? Where are you going on vacation this year? He's a one-track mind. He wants to build this company. I mean, he's the one that looked me in the eye last September when they were out here for the Beaver Creek conference, and we got together for dinner. I mean, he looked at me with a straight face. He goes, I think eventually I can develop this into a $1 billion market cap company.
And so that's the ride you're on. So then you got 2 10-baggers you're looking at if it works out.
Heliostar and Cabral are among my 2 largest holdings. U.S. Gold is by far my largest holding.
And you've held U.S. Gold for 8 years, right, Dave? It's because they IPO'd in 2017, I think, right?
Yeah, I didn't get involved with it until early 2018. That's when they were still, their flagship asset was the Keystone Project in the Cortez Trend.
I've been on that mountain.
They had this opportunity to buy the company that owns the CK Gold Project. It was originally called the Copper King Project, and so they pivoted to that because they looked at it and they're like, it's not going to be a huge deposit, but it's going to be one that's going to be very easy to develop. They got, from the get-go, they've had the full support of the state of Wyoming. In fact, it sounds like the state of Wyoming may raise some muni bonds to help them finance the cost of the mine construction. So, they've done everything. Every step of the way, they did everything they said they were going to do with that project, including getting it permitted. So now they're just working on, again, it's the pre-preparation for going into mine construction.
Mm-hmm. And there's offset credits there, right, with the aggregate, I believe, right? That they could sell.
Oh, that's a whole. Yeah, I forgot about that. I always forget about that because they don't really talk a lot about it right now. I think they'll probably start talking about it now. So the rock that hosts the deposit and that they'll be pulling out in order to build the mine, they can convert that into aggregate that'll be used in constructing the mine. But there's also a commercial market for selling aggregate
to Martin Marietta, right? Not too far away.
That'll probably be the most likely buyer because Martin Marietta is 2 hours south along I-25 from where the mine is. In Colorado. So, the mine's in Wyoming, but Martin Marietta is based in probably less than 2 hours now that I think about it. So, yeah, that'll be the most obvious buyer. And I'm pretty sure, I don't think they've really run economic studies for public consumption, but I mean, the revenue that they'll generate and the profitability they'll generate from that aggregate is going to be huge.
Which offsets the mine build, obviously.
Well, I mean,
the cost of the mine build.
Yeah, it because they can use the aggregated offsets. What it does is it just further supports the case for finding partners to help finance the construction of the mine.
So an offtake partner could fund it. You're saying
it makes the company more valuable. In addition to selling copper and gold, they'll be, and I think at the current price, I think gold is something like 60 or 70% of what will be produced by that mine. and then you'll have the aggregate on top of that. So, again, I think U.S. gold, I think that thing, especially once they get to the point where they announce the construction of the mine, I think we're still going to, I still think there's the second wave of the Wilson curve that company will experience. And I think that'll, again, I think it has potential, assuming the gold market holds up, which I think it will. I think that has potential to be a almost no risk 2 to 3 bagger this year, right? Because it's been, other than the execution of building the mine and starting it up, it's been de-risked completely, right? It's already got its permits, and financing will not be a problem. Like that, I can guarantee. And the guy who runs U.S. Gold, because we were talking about this earlier, I pay very, very close attention to the experience and track record of management when I'm looking at junior project development companies. The CEO has taken, I know for sure at Barrick, he's taken projects from start to finish. So he's got experience in constructing a mine, and that's important.
And U.S. Gold Corp was a 2019 show sponsor, I'll point out. So that's why I was on the Keystone Mountain. I know the CK project. I haven't kept up with it as much, but did know it back then, and that's great that it's progressing. But it just shows, Dave, it shows you how long these things take, right? Because I remember 2019, you're like, we think we can get our permit in 18 months, and like it's 2025. It's not the issue.
Well, it's a different company than it was in 2019, right?
Yeah. But I mean, I'm just pointing out for listeners, especially newer investors, that mining you got to have patience with mining, because it doesn't move quickly, except when it does in a 6-month bull market.
If you take a project that's essentially evergreen that a junior is just starting to drill out, I mean, you're probably looking at 8 to 10 years before they even get it to the point where they can make a construction decision, or longer. And there's all kinds of variables that go into that. So, I mean, that's what's going to be amazing about what Heliostar is doing with Ana Paula. I mean, they bought it, I can't remember if it was late 2023 or early 2024. But if the timeline goes smoothly, and they don't have, unforeseen disruptions, they could be producing gold by, late 2027, early 2028. So you're talking, what, 4 to 5 years to go from, a project that was originally slated to be an open pit project. And they looked at it and said, no, there's a much more valuable underground project here. And that's what they've been advancing. 4 to 5 years to get that thing into production. And the kicker is, they're probably not going to have to issue any more shares once they've got both of the 2 small Mexican mines optimized and fully running.
There's a lot of money to be made if you can buy these companies that actually can successfully build. I remember when Silvercrest was, I think, a $10 million market cap, Dave. I remember that in 2016 when I first got into this, and then look at where that went when they successfully built it.
I've got a story about that. So I started up my short sellers journal in December 2015. And I was familiar with the Las Chispas asset because I was, heavily involved in Silvercrest mines, which First Majestic bought for the Santa Elena project. They also wanted Las Chispas, but Eric Fear wouldn't sell it to him because he wanted to spin it off and develop himself. So I said to the investor relations guy at the time, I said, look, as soon as you guys go public, I want a phone call because I'm buying the stock. And that was I got that phone call in January of 2016. And the stock was at 16 cents. And I didn't have my mining stock journal until March. So I wanted to get credit for having picked that stock at 16 cents. I put it in my short sellers journal as a contra dollar play. It's a good way to short the dollar.
And then they successfully built it and went to the New York Stock Exchange.
That's a 1 in 50, 1 in 100 type of situation. Those are hard to find and they're rare. But I mean, obviously, Core bought it for $10, right? So from 16 cents in January of 2016, it went, it got bought out for $10. What, 8.5 years later?
Yeah.
That's another mine that got up and running pretty quickly, because it's been operating, I think, for about 2 years.
Mm-hmm. Dave, your website is investmentresearchdynamics.com, and just remind listeners one more time what they can find there about the Mining Stock Journal.
Sure. It's at the top are links to more information about the Mining Stock Journal and the Short Sellers Journal, what they cost, what you expect, or what you can expect and what you get. And I also now have a Substack. It's called Mining Stock Journal. It's a Substack. And that's a free subscription for limited content. Or if you subscribe to that, it includes a subscription to the Mining Stock Journal. If you do the paid subscription, and I mean, I don't have a minimum time that you have to be a subscriber. Like, if you decide after the first month you don't like it, you can just email me and cancel.
Yep. And it's reasonably priced. What do you charge, Dave, too?
$30 a month. I held it at 20 for as long as I could, but the non-CPI rate of inflation, cut into my costs or added to my costs, so I raised it to 30. And I get guys, especially newer subscribers, all the time. They're like, "You're not charging enough for this."
Yeah. Yep. Well, I always appreciate your insights. Thank you for the 3 stock picks and your insights on the macro and the gold markets, Dave. Thanks for coming on the show.
Thanks for having me on, Bill. It's great to see you again.